Okay, so continuing my great big picture overview of the statement of cash flows. We have the three activities we just talked about: operating, investing, and financing. You see those, my little formatted statement of cash flows here. Operating, investing, and financing, they're nicely color-coded for us. So when we look at the statement of cash flows, there's going to be two different approaches we use to prepare it, and I'm going to just give you a really brief overview of what's called the indirect method, and then I'll do another little video, real quick overview of what's called the direct method. So using our really simple numbers with the indirect method, it's called that because we're going to start with a net income number here. So our net income just going to come in here as a cash plus, and I'm just going to pull that net income number right there, 925. And then I'm going to look to this handy column I have on the balance sheet. I made a column that says ending minus beginning. Okay, so for each of these items, I took the ending balance and subtracted the beginning balance, which in my really simple example is very simple because all the beginning balances are zero. Okay, so if you're thinking, well, that's just a repeat. No, if it's a formula, but it's because these are all zeros. Looks like a repeat. All right, so operating activities. So by putting the net income here, I've essentially taken care of this section of operating activities. I need to think about the other things I noticed as operating activities. So I'm going to leave cash alone because after all, that's cash, and we're trying to explain that $2,100 change in cash. So I'll leave that alone. But when I look at inventory, I just pick up the change in inventory here. So the change from the end of the year to the beginning of the year was a plus 75. So inventory grew by 75. What I want to think about on the statement of cash flows is how did that additional inventory impact my cash position? All right, so in terms of my cash position, anytime those current assets increase, that really represents a decrease in my cash position. So that would be cash going down because of that inventory increase of 75. Now, if I look at my accounts payable increase to 50, so how does an increase of 50 on the accounts payable side affect my cash? Well, if you think about it, if it's I borrowed money essentially when I have an accounts payable, so that increases my cash position. So that's going to come in there as a positive. So we'll talk about this more in class, but a really quick rule, if you will, when the assets go up, it's a negative impact on my cash, and when the liabilities go up, it's a positive impact on my cash, and vice versa. So there's my operating activities. We said the land would be an investing activity, so how would the purchase of land impact my cash position? I'm just going to pick up that $800 change as cash down because I either used cash straight out, that's going to, or eventually had to pay cash. So it's going to decrease my cash position. And then for my financing activities, I have the common stock that we issued, and that would increase my cash position. So if the common stock increases, that's an increase in my cash position. So if I look, take the sum of all of these individual changes, it should bring me to my change in cash, which we identified up above as 2,100. We've pulled all the pieces. You can see it's really basic. I've just pulled the pieces and put them in a different order here on the statement of cash flows. I had cash at the beginning of 0. So in a statement of cash flows, that's the way you end it. You start with the change plus the beginning balance to give you your ending balance. So just to make it look nice, I'll put a double underline there and a single underline here and an underline there. All right. So that gave me my cash at the end. Now this is the cool thing about statement of cash flows. You know when you're finished if you've got the right answer, right? Because it has to match those two pieces, the change in cash and the change in cash. All right, so this is, again, this is the indirect method of the statement of cash flows in a really simple example. The indirect method is because we start with net income rather than directly reporting the sources and uses of cash in the income statement. All right, we'll do that next.